Hello, welcome to IPTM. Okay, let's unpack this. This is a payroll classroom summary led by Indian payroll trainer Mr. Ajit. Today, we'll explain and summarize the Form 24Q return submission session so payroll learners can clearly understand what was covered in this session and explore great learning opportunities for your career from this session. We've basically taken a really comprehensive summary from a recent payroll training session, and it's packed with specific action-oriented takeaways, plus a detailed guide on the, well, let's face it, intricate process of TDS return filing. So whether you're a seasoned payroll pro looking to sharpen your edge, maybe an HR executive aiming for a deeper grasp of compliance, or perhaps just someone who's curious about this meticulous world of tax compliance and how it impacts employees, this deep dive offers you a shortcut, really, to essential knowledge and clarity. We're here to distill those sometimes quite complex processes into clear, actionable insights. We want to guide you through the critical pathways of Indian payroll management.
Yeah, and what's truly fascinating about the session, led by Mr. Ajit, and really the core of mastering payroll, is how comprehensively it covers things. It's not just looking at one isolated aspect of the payroll function, It genuinely covers the entire ecosystem that professionals navigate, like daily. It goes way beyond just the technical mechanics of calculating salaries. Instead, it frames payroll as this sophisticated interplay of financial planning, regulatory adherence, and importantly, strategic employee well-being.
That's a really interesting way to put it. So it's not just about crunching numbers.
Exactly. And this holistic approach, it's crucial for anyone in payroll. It connects tasks that might seem disparate, like managing pension schemes, filing tax returns, even evaluating software. It pulls them into a coherent, interconnected workflow. It highlights how different compliance requirements are intricately intertwined and, how technology is increasingly pivotal in handling all this complexity efficiently.
Right. So you move from just knowing what to do.
Precisely. To understanding how to do it with precision and, maybe more importantly, why each piece matters, why it matters to the overall financial health of the company and, of course, its employees.
That's a fantastic framing. So it really is about seeing the whole picture, the forest for the trees, rather than getting lost in, individual compliance details. So what were the broad foundational pillars that Mr. Ajit's session really explored in this integrated view of payroll operations?
Yeah, exactly, providing that strategic overview. The session structured its learning around several core pillars of effective payroll management. First, there was a pretty extensive discussion on the National Pension Scheme, or NPS. Now, for listeners who might not be deep into the Indian context, NPS is essentially a government-backed retirement savings program. It's designed to help individuals build up a decent fund for their post-retirement life. The session covered its multifaceted benefits, the real practicalities of setting up accounts, and the different investment options available. It really emphasized that NPS isn't just some HR perk. It's a significant financial planning instrument. It has dual advantages, really, for both the employee and the employer.
Okay, NPS is one pillar. And then the absolute core of payroll tax compliance. That must have been a pretty deep dive in itself.
Oh, absolutely it was. The second major area delved deep into tax compliance procedures. And this segment, it went beyond just the basics. It explored the really intricate process of preparing quarterly returns, which, as any payroll professional knows, is a critical and very time-sensitive operation. It covered the meticulous requirements of data validation, making sure every single piece of information is accurate and formatted just right. And of course, the precise steps for submitting income tax returns and managing TDS, tax deducted at source deductions. This segment, honestly, it forms the backbone of ensuring strict regulatory adherence and maintaining the company's good standing with tax authorities.
Yeah, you mess that up, well, everything else gets shaky.
Exactly. Without mastering this, everything else becomes a bit of a house of cards.
And finally, because, well, we live in a digital age, right? The technological backbone that supports all of this. You just can't handle modern payroll efficiently without the right tools and systems, can you?
No, you really can't. The session rounded off with practical insights into software implementation and compliance tools. This included comprehensive discussions on various tax calculation utilities, exploring different online submission methods, and offering overarching guidance on efficiently managing all the associated tax-related documentation and compliance requirements in a digital environment. It wasn't just about which software to use, but how to leverage it effectively, how to ensure its data integrity, and how to stay updated with evolving features and, crucially, tax law changes that impact these tools. This holistic approach makes sure that payroll learners not only understand the what and why of compliance, but also the how through effective tech application. It makes them truly well-rounded professionals.
Okay, here's where it gets really compelling for anyone managing payroll. Let's start with the National Pension Scheme, NPS. It's a term we hear thrown around a lot, but what did Mr. Ajit really illuminate about its direct benefits for both employees and employers? Because, like you said, it sounds like it's far more than just a retirement fund. It has immediate implications for financial planning.
You've hit on a crucial point there. Beyond just the long-term retirement aspect, Mr. Ajit and Kumar, who specifically elaborated on this part, really drove home how NPS works. When it's strategically embraced by both sides, employees and employers, it transforms from just a compliance thing into a powerful tool, a tool for talent retention and boosting employee financial well-being. For employees, their contributions directly cut their taxable income under Section 80 CCD of the Income Tax Act. It's an immediate tax saving right there. At the same time, this builds up a solid retirement fund, ensuring long-term financial security.
And for the employer, what's the upside for them?
Well, for employers, their contributions, which can be up to 10% of the employee's basic salary plus dearness allowance, are also tax-deductible expenses for the company. So it really makes it a compelling win-win situation. There was a particularly insightful piece of advice highlighted during the session, specifically for employees under 48 years old. Mr. Ajit strongly suggested they seriously think about a strategic move, converting a portion of their special allowances into NPS contributions.
Interesting. Why specifically under 48?
Well, it's about the longer investment horizon. This isn't just about saving taxes now, although that's a big plus. It's about actively securing a more robust retirement benefit, taking advantage of potentially decades of compounding returns. It signals a proactive approach to long-term financial health. And this is a key area where payroll professionals can provide, frankly, invaluable guidance to their workforce.
That really does sound like smart financial structuring, not just, putting money away somewhere. But how do these contributions actually work in practice? Is it as straightforward as, say, Provident Fund contributions, where employers often deposit into a dedicated trust?
That's a key distinction Kumar made, and it's really important for operational clarity. Unlike Provident Fund or PF contributions, which often involve employers depositing funds into a recognized PF trust, NPS contributions must be made directly, either by the employer or the employee through the NSDL website. NSDL, that's the National Securities Depository Limited, acts as the central record-keeping agency for NPS. There's no intermediary trust for NPS like you might see with PS. This direct method ensures transparency, strict adherence to NPS rules, and clear traceability of every contribution.
Okay, so direct deposit via NSDL. Got it.
Yeah. And the session also emphasized a vital practical point for payroll professionals. It's not enough to just offer NPS. You need to actively identify eligible employees and then proactively educate them about these benefits. A best practice highlighted was to regularly communicate with employees, especially those under 48, about the advantages. This could involve sending out informative emails, maybe pointing them towards seminars organized by a POP that's a point of presence, like an authorized bank or financial institution that helps with NPS accounts. This proactive education is vital. It helps ensure good uptake and maximizes the scheme's benefits for everyone.
That makes a lot of sense. So knowing how to contribute and why it's beneficial is one thing, but then there's the whole account structure and the rules that govern these investments. What did this session cover regarding the actual setup and ongoing management of these NPS accounts?
Right, Kumar definitely delved into the structure. He explained the two-tier account setup of NPS, which is really fundamental to understanding how it works. You have Tier 1. This is the primary pension account, designed specifically for long-term retirement savings. It comes with stricter withdrawal rules, naturally, to encourage people to keep contributing, and it carries the main tax benefits. Then there's Tier 2. This is more like a voluntary investment account. It offers much greater flexibility for withdrawals.
So you can get money out easier if needed.
Exactly. But the trade-off is it doesn't provide the same tax advantages as Tier 1. It's useful for people who want to invest extra funds within the NPS framework, but maybe need easier access to that cash. Now, when it comes to investment choices within these tiers, employees have options. They can opt for either a manual selection, where they actively choose their asset allocation, or an auto choice option. And the auto choice is pretty interesting because it automatically adjusts the asset mix based on the subscriber's age. It basically de-risks the portfolio as you get closer to retirement.
That sounds quite smart, actually. Less guesswork for the employee.
It is. And interestingly, this was highlighted as a key operational detail. The default setting for new accounts is typically this auto choice. So, a recommended best practice for payroll teams is just to ensure this default is correctly applied during setup. It simplifies the initial process for new folks who might not be investment savvy.
And I imagine the linkage to national IDs like Aadhaar and PAN is absolutely critical here for compliance and just making sure everything matches up in the Indian tax system.
Oh, absolutely critical. NPS accounts are inextricably linked to both the employee's Aadhaar number, India's unique ID, and their PAN number, the permanent account number for tax. This connection is vital. It ensures proper identification, seamless tracking of contributions, and maintains strict tax compliance. It helps prevent fraud and ensures all tax benefits and withdrawals are correctly attributed.
Makes sense. What about getting money out? You mentioned stricter rules for Tier 1. What happens, say, after 10 years or at retirement?
Good question. Speaking of withdrawals, a significant detail covered was the rule after 10 years of contribution, and particularly maturity and withdrawal norms. When someone hits 60, or after 10 years if they exit early under specific conditions, the withdrawal rules kick in. Specifically, the session detailed the 60-40 ratio. Generally, 60% of the accumulated fund is tax-exempt upon withdrawal. But the remaining 40% must be used to purchase an annuity, basically, a regular income stream, and that annuity income is taxable. This is a crucial detail for financial planning. You need to understand the ultimate net benefit of NPS.
So NSDL isn't just for setup, they manage the investments too.
NSDL plays a central role throughout, yes. Not just in managing the initial setup and contributions, but also in overseeing those auto-choice options and facilitating the selection and management of mutual funds and other investments within the scheme. And as practical guidance for payroll teams dealing with new employees, a really crucial best practice was emphasized. Consider disabling investment choice options for new employees until they complete 1 year.
1 year? Why the wait?
It just allows new hires time to settle in, understand the company's benefit structure properly, and learn more about NPS before they have to make potentially critical long-term investment decisions. Gives them breathing room. Furthermore, the session clarified the employer contribution process. It explained how these employer NPS contributions are processed and deposited directly into the system, ensuring that the employer's part is seamlessly integrated into the employee's account, following all the correct compliance steps. This comprehensive understanding really drives home that dual benefit of NPS significant tax savings and a robust framework for retirement planning. It's a key area where knowledgeable payroll pros can genuinely add immense value by guiding employees.
Okay, let's pivot now. Let's talk about what many consider the real bedrock, the absolute bread and butter of payroll compliance, quarterly returns, specifically Form 24Q. Why is this particular form so critical for employers in India? And what were the key takeaways from Mr. Ajit's masterclass on navigating this imperative? It feels like the gateway to so much else in tax compliance.
You're absolutely right. Form 24Q is the gateway. It is, without a shadow of a doubt, central to quarterly TDS compliance, specifically for salaries under Section 192 of the Income Tax Act. That's the section dealing with tax deducted at source on salary income. Think of Form 24Q as your company's quarterly report card to the tax authorities. It's a structured format where employers report the tax deducted from employees' salaries, quarter by quarter. Mr. Ajit really stressed that proper, accurate, and timely filing helps payroll pros and HR execs not just avoid non-compliance issues and, frankly, hefty penalties, but it also ensures the smooth flow of tax credit to employees.
That's a crucial point for the employees themselves.
Huge point. When this process falters, employees face significant hurdles filing their own income tax returns and claiming their rightful credits. And that can lead to widespread employee frustration, and a flood of queries hitting the HR and payroll desks.
And it links directly to other essential forms too, doesn't it? Like the TDS certificates Form 16 that employees desperately need for their own tax filings.
Precisely. The session highlighted that Form 24Q isn't an isolated form. It's part of a bigger interconnected ecosystem of tax documents. The accurate data you enter into Form 24Q directly feeds into generating Form 16, that's the annual TDS certificate issued to employees, summarizing their salary and tax deducted. It also links to Form 12B, which is a statement of income particulars an employee gives to a new employer. The overarching emphasis throughout the session was just unwavering accuracy, meticulous data bifurcation, meaning segmenting and classifying the data correctly by tax codes, and crucially, timely submission. The penalties for late or incorrect filing of Form 24Q, they can be substantial. We're talking interest, late fees, potentially even disallowance of expenses for the company. These penalties hit both the company's bottom line and the employees waiting for their tax credits. It makes it a high-stakes operation, truly.
So it's clearly not about just pushing a button and hoping for the best. It's about careful, systematic preparation. What does a payroll manager absolutely need to have ready? like a pre-flight checklist, before even thinking about hitting submit for Form 24Q. Are there specific documents or data points that are just non-negotiable?
Oh, absolutely. It's a stringent pre-flight checklist, and skipping even one item can derail the whole thing. Mr. Ajit outlined a very clear set of required documents and data points that must be meticulously ready before you even begin preparing Form 24Q. First, you need the TDS return acknowledgement of the last filed Form 24Q. This is crucial. It confirms your previous filing was successful and provides continuity, especially if you need to make revisions or link previous quarters. Without it, you might hit snags in sequence or reconciliation.
Okay, the previous acknowledgement. What else?
Second, you absolutely must have the salary data for the last 3 months of the quarter you're filing for. This is the raw material, right? The core info from your payroll system detailing all earnings, allowances, deductions for every employee during that period. Third, and equally vital, are the TDS challenges deposited for those last 3 months. These are your proofs of payment. They confirm that the tax you deducted from salaries actually went to the government. Matching these challenge details with your reported TDS is a critical validation step.
And the identifying details. For the company and the person signing off, I assume those are top of the list too.
Exactly right. You'll need your precise company details, specifically your TAN, the tax deduction and collection account number, that unique 10-digit alphanumeric number. You also need your PAN, the permanent account number. These are critical identifiers for the company. And finally, the authorized person details their full name and PAN. They're the individual legally responsible for signing off on the accuracy and submission.
Okay, that makes sense. Having all that ready. How does that actually streamline the process for the payroll team?
Well, it drastically reduces that last-minute scramble, doesn't it? It minimizes the chances of errors in fundamental identifying info, and it prevents delays that could easily lead to penalties. It's all about proactive preparedness, which directly translates into efficiency, compliance, and, let's be honest, peace of mind for the payroll team. Think of it like ensuring you have all your ingredients measured and ready before you start cooking. It just makes the whole process smoother and much more likely to succeed.
That checklist sounds incredibly practical. But beyond just gathering documents, what were the direct action items or best practices discussed for payroll teams to ensure they're not just reacting to deadlines, but truly staying on top of Form 24Q and broader compliance as an ongoing process? Because this clearly isn't just a once-a-quarter scramble, is it?
No, it's far from a one-off task. It's a continuous, cyclical process. It has distinct, ongoing responsibilities baked in. For instance, a strategic best practice highlighted was for payroll professionals to continuously update their skills, and even their resumes, actually, to specifically reflect responsibility for preparing Form 24Q, managing quarterly returns, issuing Form 16. This isn't just for career growth. It underscores how critical these skills are in the job market. Another key operational best practice is to constantly ensure that employees' PAN numbers are correctly linked with their NPS accounts and their Aadhaar cards. This seamless linking is crucial. It prevents data mismatches that cause headaches during tax credit processing and ensures compliance with evolving government rules mandating these links.
And the data itself, that's where a lot of the intricate heavy lifting happens, right? The sheer volume must demand significant attention.
It absolutely does. A critical ongoing task is for the payroll team to meticulously bifurcate and match quarterly TDS data with Form 24Q before submission. This is a non-negotiable validation step. It's basically a deep reconciliation to prevent discrepancies between your internal records and what you report to the tax department. Any mismatch here can lead to rejections or notices. They also need to ensure the timely generation of Form 16 and Form 12B for all eligible employees, especially those getting benefits, and critically, ensure these are issued before June 15th of the assessment year. That deadline is paramount because employees rely on Form 16 for their own tax returns. Delays cause significant stress and potential late filing penalties for them.
So it's about getting the big annual documents out on time, but what about the daily and monthly rhythm, the more immediate deadlines that feed into these quarterly filings?
That's where the continuous discipline really comes in. The payroll team has to ensure that all quarterly data is prepared and thoroughly validated before the 7th of the following month, after the quarter ends. So for the April-June quarter, data needs to be ready by July 7th. This gives you a crucial buffer period to find and fix any issues before the final submission deadline. Concurrently, they must ensure TDS amounts are accurately calculated and deposited before the 7th of the following month after payroll processing. These are non-negotiable monthly deadlines that feed directly into the quarterly filing. Missing them means immediate interest and penalties.
And keeping records, proof of filing.
Absolutely. Finally, as a robust practice for accountability and maintaining a clear audit trail. The payroll team should always collect and securely retain written acknowledgments for the last quarter's successful quarterly return filing. This provides undeniable proof of submission. It's invaluable if there are any future queries from tax authorities. These collective actions ensure payroll pros aren't just reacting to compliance deadlines, but proactively managing the entire TDS compliance lifecycle, which is absolutely vital for the organization's financial health and its reputation.
You've emphasized accuracy and validation again and again, so let's dive into that. What does this mean specifically for the data validation process itself? It sounds less like a suggestion and more like an absolute imperative, a meticulous step-by-step procedure. What were the absolute must-dos for ensuring data integrity before submission? Because, as we know, one tiny error here can cause massive headaches down the line.
You've hit on one of the most critical aspects of the whole filing process. Accuracy and correct format aren't just important, they're paramount before you even think about importing your data into the RPU, the return preparation utility. This software, provided by NSDL for preparing TDS returns, is incredibly strict. Unforgiving, really. Even a small error in formatting, a misplaced character, a minor discrepancy can lead to the entire file being rejected upon upload, which means frustrating delays, extensive rework, and potentially incurring penalties. The session rigorously emphasized that thorough validation acts as the ultimate gatekeeper. It prevents these costly and time-consuming issues from ever reaching the tax portal. It's about catching problems internally before they become external liabilities.
So it's essentially a zero-tolerance policy from the software itself. What are some of the most common, yet maybe easily overlooked pitfalls that the team needs to be hyper-vigilant about on this data validation checklist?
Exactly. Zero tolerance is a good way to describe it. There's a stringent data validation checklist that every payroll professional should basically internalize. For instance, the employee code field must be strictly numeric only. No letters, no dashes, no special characters allowed. Many internal systems might allow alpha characters, but the RPU will reject them flat out. Your PAN, the permanent account number, must be in uppercase characters only. It also must be a valid PAN, meaning it exists in the income tax database. And crucially for India now, it needs to be actively linked to the employee's Aadhaar number. This linking is a legal requirement, and unlinked PANs will cause immediate processing failures and return rejections.
Okay, numeric employee code, uppercase and linked PAN. What about names?
For employee name, vigilance is key. Ensure there are absolutely no double spaces between words and no special characters. These might seem like tiny typographical details, but the software's validation rules are just unforgiving.
What about duplication? That seems like a really common and potentially very costly issue if you don't catch it.
Oh, very common, and indeed very critical. PAN duplication. The same PAN should not repeat under the same challen within your filing. If it does, it almost always signals an error in how deductions were allocated or recorded, or maybe a duplicate entry for an employee somewhere. The system will flag this as a fundamental error and reject your submission. Then there's date format. It has to strictly adhere to the DDMMYYY format. Any deviation, like MMDDYYYY or using dots instead of slashes, will result in immediate rejection. And when it comes to the money figures, salary amounts simply cannot be negative. This might seem obvious, but sometimes complex adjustments, clawbacks, or data entry errors can lead to negative figures if you're not careful. This is a major data integrity error that must be fixed.
And then what I imagine is the most fundamental logical check, ensuring the TDS deducted isn't actually more than the income earned. That seems like a non-negotiable principle.
That's where the core logic of tax deduction really comes into play. The TDS amount absolutely cannot exceed the declared income of the employee for that period. I mean, think about it. You simply cannot deduct more tax than the actual income an employee earned. It doesn't make sense. If your TDS amount is higher, it unequivocally signifies a fundamental calculation error that needs immediate investigation and correction. It's a massive red flag for the tax department. The session also clarified the essential income validation formula, taxable income gross salary reimbursements, official perks. This equation is the bedrock. It ensures correct calculations and that only the truly taxable portion of an employee's income after accounting for non-taxable reimbursements, if bills are provided, and approved official perks is subjected to TDS. It's about fairness and compliance.
Okay, so it sounds like very specific responsibilities and actions emerged from this intense focus on meticulous data validation. Who is typically responsible for what in practice based on the session?
Yes, very precise responsibilities and best practices were outlined. For instance, the general payroll team was continually tasked with validating all employee data. That includes a rigorous check of employee codes, PAN numbers, ensuring no alpha characters sneak into numeric fields. It requires a really keen eye for detail. When it came to reconciling payments, a key role highlighted was working on mapping the TDS challenge and precisely matching the data, often using pivot tables. Pivot tables are invaluable for cross-referencing large datasets and spotting discrepancies between your challenge payments and the employee-wise TDS deductions.
So using tools like pivot tables to manage that complexity makes sense.
Exactly. Another crucial practice mentioned was ensuring employee names in the system don't have any extra spaces or special characters again. That often causes validation failures in the RPU. Furthermore, particular attention was needed for salary calculations, especially for months where adjustments might lead to negative figures, or ensuring, and this was stressed again, that the TDS amount is never calculated to be more than the actual income earned by the employee, reinforcing that fundamental rule. The team was also advised to thoroughly cross-check all salary and reimbursement details before the final filing of Form 24Q, double-checking that only legitimately non-taxable reimbursements are excluded from the taxable income calculation. It was also vital to ensure that all tax codes and the nature of tax were correctly selected within Form 24Q, as incorrect classification can lead to misreporting income types. Finally, the specific team responsible for actually using the RPU was explicitly tasked with validating the Form 24Q data output and ensuring all proper employee details were accurately captured when preparing the actual submission file. This layered approach, with multiple checks and balances for data integrity, drastically reduces the risk of errors making it through to the final submission.
Right. Now that we've prepared and meticulously validated all that data, the next logical step is actually getting it filed. What are the specific tools and the precise sequential steps you need to follow to successfully submit Form 24Q to the tax authorities? This is truly where all that rigorous groundwork finally meets the practical reality of compliance.
This is indeed where the rubber meets the road, yes. And all that meticulous prep comes to fruition. The first step involves gathering your essential digital tools and resources. You absolutely need to download the .csi file from the Interim Tax Portal. The CSI, or Challenge Status Inquiry file, is basically your digital receipt from the tax department confirming your deposited tax payments. It contains crucial challenge info that you need to reference during return preparation. You typically download this using your registered mobile number and an OTP, and it's critical to save it in a designated, easily accessible folder.
Okay, CSI file downloaded. What next? The RPU software.
Exactly. Critically, you also need to download the latest version of the RPU, the return preparation utility from the NSDL website. Mr. Idjit strongly stressed this. Always use the latest version, whether it's v5.7 or whatever the most current one is. Tax software gets constantly updated by the authorities' new rules, revised features, bug fixes. Using an outdated version is a really common cause for validation errors and submission failures. The session also mentioned that while RPU is the official free utility, many organizations do opt for robust third-party payroll software solutions for return prep. These often offer more support, integrated features, and can significantly streamline the process depending on the company's needs and scale.
So once you have these foundational tools, the CSI file, the latest RPU, or your third-party software, how do you actually start populating the return with all that validated data? What are the key sections you're filling out within the RPU?
Step 2 is to meticulously prepare the return using the RPU, or equivalent software. This involves several critical data entry points, and precision here is absolutely paramount. First, you carefully enter all company details. This means accurately inputting your company's correct BSR code, that's the 7-digit code banks use for tax transactions. You'll also enter each individual challenge number, the precise dates of deposit for each challenge, and making absolutely sure the proper email ID and mobile number are provided for notifications. Any slip up here can lead to crucial communication issues with the tax department about your filing status or any problems found.
Okay, company details sorted. Then the challenge themselves.
Correct. Next, you meticulously add challenge for the quarter. This involves consolidating all the details of your deposited challenge into the RPU. Often, payroll teams prepare a consolidated summary of these challenges in an Excel sheet beforehand, just to ensure all tax payments made for that quarter are fully accounted for and correctly mapped to the deductions being reported. And then comes the biggest part, the most complex component. You then add employee-wise salary and TDS data. This means meticulously gathering the last 3 months' salary details, TDS deductions, allowances, everything relevant for each and every employee. This requires immense precision and constant cross-referencing with your internal payroll records.
Sounds like where most errors could potentially creep in.
It is. For example, a key best practice highlighted was ensuring the correct PAN number and employee code are consistently used for every single entry to avoid mismatches. Another vital step is verifying and updating Form 24Q with the correct financial year details, making sure the return aligns perfectly with the relevant assessment period. It's also incredibly helpful, almost essential, to consolidate all employee details in one centralized, accurate data source for quarterly returns. It prevents fragmented information causing chaos, and crucially, you must ensure all reimbursements and official salaries are calculated correctly for Form 24Q, as this directly impacts the final taxable income and the TDS deducted amount.
Phew. Okay, after all that intense data entry, there must be another critical validation stage right before you actually submit, correct? It feels like you just can't be too careful here.
You absolutely cannot be too careful. Step 3 is precisely that, to create and rigorously validate your return files. After entering all the data into the RPU, you use the utility itself to create the FUV file. That's the file validation utility file. This FUV file is then run through the FEU utility itself. Think of the FEU as a highly stringent proofreader and compliance checker rolled into one. It meticulously checks your FUV file for any errors, format, data entry, compliance with the tax department's latest rules. It's your last line of automated defense against rejection. It identifies issues like incorrect PAN formats, date discrepancies, mismatches, and challenge details. If the FDU finds errors, it generates an error report. You must fix these in the RPU, then recreate the FUV file and revalidate. Rinse and repeat until it's clean.
And what about Form 27A? You mentioned that earlier.
Right. A significant point raised during the session was the generation of Form 27A alongside the FEU file. Now, unlike Form 24Q, which is largely system-generated based on your data, Form 27A requires manual preparation and validation. Form 27A is basically a summary of the ETDS return. It provides control totals for the amount paid and the TDS deducted. It needs to be manually signed by the authorized person and submitted along with the electronic file, if filing physically, or kept for records if filing online. A key best practice here is also ensuring the CSEC file, the challenge status file we mentioned, is validated for correct format too, as it's integral to the reconciliation. And if any errors are flagged during validation, it's critical to verify and correct them in Form 24Q using the provided platforms or going back to your payroll system.
So once everything is prepared, validated, FEU gives the green light, Form 27A is ready, how do you actually get that return into the hands or systems of the tax authorities? What are the final submission methods?
Step 4 is the culmination. Submit the return. You essentially have two main methods, either online via the TIN portal. This is increasingly common, much more efficient, and generally preferred by most organizations now. Or you can submit it physically at a TINFC, a Tax Information Network Facilitation Center. These are authorized collection points for various tax documents. After successful submission, whichever method you use, it is absolutely critical to collect and securely retain the acknowledgement number for your records. This is your undeniable proof of filing, like your digital receipt. This acknowledgement number is essential for tracking your return, making any future corrections if needed, or responding to any notices from the tax department.
Right, always keep the receipt. Good advice for anything tax-related.
Absolutely. And here's a critical overarching tip for long-term compliance and just, well, peace of mind. Always retain a robust backup of all your crucial files. Your .feu file, your .txt data file, the .cizi file, and your manually prepared and validated Form 27A. These are invaluable for future audits, for making necessary corrections to previous filings, or just as a historical record. Losing these can cause significant complications later on. The session also touched briefly on the broader future here, particularly the push towards automation. Many organizations are looking into, and some are implementing, technologies like Selenium to automate parts of the Form 24Q filing process. Selenium is basically an open-source tool for automating web browsers. In payroll, it can automate data entry into online portals, some validation steps, maybe even the submission process itself. It can significantly boost efficiency and cut down on manual errors.
But automation isn't a magic wand, right? Human oversight is still needed.
Crucially, yes. It doesn't eliminate the need for human oversight and validation. The team emphasized that regardless of automation levels, ensuring Form 24Q is filed within the deadline remains paramount to avoid penalties. This includes needing to manually calculate and enter any interest or penalty amounts if required, showing you understand the costs of non-compliance. It also means meticulously validating and matching TDS amounts across multiple channels, especially if deposits were made in installments, to ensure a complete picture. And reinforcing that critical validation point again, always ensure TDS calculations do not exceed the employee's income. Finally, the importance of providing a proper active email ID and mobile number for notifications in the RPU software was underscored. You need to get those critical communications from the tax department promptly.
This whole process, it sounds incredibly detailed, almost like navigating a labyrinth, but with very specific, very strict rules at every single turn. Beyond the core quarterly filing, what other nuanced scenarios or ongoing compliance tasks did Mr. Ajit and his team highlight? Things that payroll professionals really need to be continuously mindful of. Because compliance isn't just about hitting those big deadlines, it's truly about continuous vigilance and adaptability, isn't it?
That's a perfect way to put it, continuous vigilance. The session definitely delved into these broader nuances and advanced scenarios that really characterize the real-world challenges of payroll. For quarterly returns, data entry, and error resolution, the guidance went beyond just saying, enter the data correctly. It detailed how to meticulously input employee details, which means understanding the nuances of various fields, and how to correctly select the appropriate tax codes within your software systems. This ensures income and deductions are categorized correctly. Furthermore, the session provided concrete strategies for resolving common issues you might encounter during this process. Things like effectively handling duplicate entries, which can easily get filings rejected, and correcting incorrect data points that might misrepresent an employee's true tax liability. It's about being a proactive troubleshooter, really, using system reports, cross-referencing to identify and fix errors before they become big problems.
And what about those often confusing salary components, like reimbursements? That seems like a really common area where mistakes can be made, especially regarding whether they're taxable or not.
Oh, it absolutely is a common area of confusion. And Mr. Ajit made a critical distinction under salary, reimbursements, and tax procedures that, honestly, many professionals sometimes overlook. He clarified that reimbursements are non-taxable only if proper, verifiable bills are submitted by the employee. This means if an employee claims reimbursement for, say, fuel or medical expenses, but fails to provide the necessary supporting documents, or if the documents aren't compliant, then that amount becomes fully taxable.
Right, no bill, it's tax.
Exactly. This is a significant point of potential noncompliance. It can lead to substantial tax liabilities for the employee if the payroll department doesn't handle it correctly. It might require subsequent TDS adjustments or even penalties down the line. The session also clearly reiterated the crucial last dates for TDS deposits, usually the 7th of the following month, and tax deductions, reinforcing that monthly discipline needed to avoid interest charges under Section 234E or 234F for defaults. It also reviewed the overall process for making timely tax payments to the government.
And the CSIC file, that digital receipt of challenge, seems to keep popping up. What's its role beyond just the initial download when you're preparing the return?
Good point. The CSIC file upload and validation segment provided invaluable step-by-step guidance on actually uploading and validating these CSIC files, particularly when you need to rectify errors or make revisions to a return. This included detailed troubleshooting for common errors that can crop up, things like issues with file names or incorrect formats, which can be incredibly frustrating if you don't know what to look for. It's all about ensuring that the digital bridge between your deposited tax payments and the tax portal is perfectly constructed and communicating correctly. The team also reviewed the critical steps for confirming you're filing a regular return versus a revised one, and meticulously selecting the correct quarter and financial year during submission. A simple mismatch there can cause the whole return to be rejected.
Finally then, what were the overarching general considerations? The kind of guiding principles for tax compliance and filing that every payroll professional should always keep top of mind.
This section touched on the broader strategic elements that really transcend individual forms or deadlines. First, the ongoing mandatory importance of linking PAN and Aadhaar cards was reiterated. This is just fundamental for all tax activities in India now, and non-compliance can lead to severe penalties, even PAN deactivation. Then, practical advice on handling notices from tax authorities was provided. The key takeaway wasn't about panic, it's about knowing how to systematically respond, understanding what specific information is needed, and adhering strictly to the deadlines outlined in the notice.
Dealing with notices calmly and methodically.
Exactly. They also cover the complexities of managing interest and penalties. For example, a clear illustration was given. For taxable income above a certain threshold, like $50,000 in the example, though thresholds change, 20% TDS is often deducted without certain rebates or exemptions. If there's a shortfall or delay, interest charges can accrue quickly. Understanding these implications for higher earners and the financial consequences of non-compliance is critical. The session concluded with essential guidance on revising returns and updating Form 16 data. This acknowledges that, well, sometimes errors happen, or situations change like retrospective salary revisions. Knowing precisely how to correct these compliantly is just as important as filing correctly the first time. The overall strategy for payroll professionals, as emphasized throughout Mr. Ajit's masterclass, boils down to a constant need for unwavering vigilance, absolute accuracy in data management, and a real commitment to staying updated. Updated with both the latest software versions and the ever-evolving tax regulations, is truly a field of continuous learning and adaptation.
So what does this all mean for you listening in? This deep dive into the 24Q return submission and the broader world of payroll compliance, as shared by Mr. Ajit, it truly highlights the meticulous detail, the strategic thinking, and frankly, the specialized expertise required in this field. It's crystal clear that it's not just about ticking boxes. It's about ensuring data integrity, leveraging the right tools effectively, and providing invaluable support to both the organization and, importantly, its employees.
And it really is about understanding the why behind each intricate step, isn't it? Not just the what. Given the continuous evolution of tax regulations, the increasing complexity of financial structures, and the undeniable push towards automation and AI in finance. How might your role in payroll management transform in the coming years? Will you move from primarily manual tasks to more strategic oversight? Focusing on error prevention through intelligent systems, becoming an even more vital consultant on employee financial well-being? That's the exciting and perhaps slightly challenging question for the future of this indispensable profession.
Indeed, a lot to think about there. Now, if you're looking for live sessions or perhaps some personal guidance to help you navigate these complexities, make sure to check out the upcoming IPTM courses and join their live training. They offer some incredible opportunities to deepen your expertise. If you liked this deep dive and want to continue your learning journey, don't wait, watch the next video now and keep learning something new. Thank you for being part of IPTM. Happy learning and keep growing.
Thank you.